The Canadian dollar broke below the 1.25 mark against its U.S. peer in the middle of the trading week as the loonie found support on the Bank of Canada, BOC, trimming its quantitative easing efforts. Currency has strengthened against the greenback this year, but the growth has been subdued as of late. Could the loonie renew its substantial rally if energy prices rise again? On Wednesday, the Bank of Canada, BOC, announced that it would cut its weekly net bond purchases from $4 billion to $3 billion as of April 26. The central bank confirmed that the adjustment to its bond buying campaign is a reflection in the progress made in the economic recovery. Interest rates were left unchanged at a historic low of 0.25%, meeting market expectations. There has been rampant speculation the BOC could be the first central bank in the G7 to begin tightening monetary policy. The institution wrote in a news release following the April policy meeting. The outlook has improved for both the global and Canadian economies. Activity has proven more resilient than expected in the face of the COVID-19 pandemic, and the rollout of vaccines is progressing. A number of regions, including Canada, are experiencing a difficult third wave of infections and lockdowns. The more contagious variants of the virus are straining healthcare systems and affecting hard-to-distance activities, and have introduced a new dimension of uncertainty. The recovery remains highly dependent on the evolution of the pandemic and the pace of vaccinations. Policymakers project that gross domestic product (GDP) growth will be 6.5% in 2021 and 3.7% in 2022. Inflation is forecast to be in the 1% to 3% range amid base year effects and higher crude oil prices, but it anticipates that inflation would say to 2% in the second half of the year. Energy prices pared their losses midweek, but they remain in the red. May West Texas Intermediate, WTI, crude oil futures tumbled 41 cents, or 0.66%, to $62.03 per barrel. May natural gas futures plunged $0.043, or 1.58%, to $2.684 per million British thermal units, BTU. Since Canada maintains a current account deficit, the economy depends on exports or growth. Oil and gas remain the nation's top shipments, so any price change can impact the loonie and the broader economy. The USD-CAD currency pair fell 0.97% to 1.2489, from an opening of 1.2612 at 16:53 Greenwich Mean Time on Wednesday. The EUR-CAD dropped 0.98% to 1.5028, from an opening of 1.5175.